What are you looking for in terms of the crucial theme for all of these banks, or is there one, Devin?
Hey, good morning, Contessa. Yeah, I think we're looking for a lot of the same things we were looking for from the big banks that just reported this week. And I would say overall, it was good news. We are coming in this year, and I think there's a lot of enthusiasm. So the bar is clearly high, and I think that was maybe the concern, just is the bar too high? But I would say we've been hitting numbers. And as you think about some of the big themes, it's can net interest income be resilient through a lower interest rate environment? And all the large banks are guiding for kind of mid single digit growth into 2026, even with lower rates. I think you'll hear a similar sentiment from the regionals. The capital markets kind of continuing to have legs after what was a pretty good 2025. So the recovery is still intact. A little bit less of a theme for the regionals, but I think still quite constructive for earnings. And then, consumer remains in very good shape. And so kind of no really concerns out there on that front. And then the last piece is around capital relief and regulatory relief. And, I think that the big banks were a little bit reluctant to give too much quantification, but clearly the direction of travel is this should be a year where you see more action on capital relief and potentially more return and more optimization, meaning you can reinvest some of that capital back into higher return opportunities. So overall, I think the bar was high and they met it. And kind of that's our expectation going through the rest of earnings season, particularly for the regionals where the stocks have done well, but not quite as well as some of the largest banks that we cover in 2025.
Are these regional banks under pressure to scale?
Without a doubt. So a lot of the earnings call that you've heard thus far has been kind of two big themes. So spending. So JP Morgan's increasing their expense base in 2026 by $9 billion. $9 billion is more than a lot of banks spend overall in their entire firm, right? And that's just the increase from 25. A lot of that is coming from modernization efforts, investing in kind of the next theme of fintech and tokenization and stable coins, and the kind of frontier where financial services are connected to. And so I think, regionals have to be thinking about that as well. And I think many of the largest ones are, but, cost pressures, scale is becoming more important. But then as we think about, going forward, I think there's big opportunities for this group as well, because there's still, in banking, relationships matter. And, I think a lot of the regional banks have very strong relationships, particularly on both the commercial side and the consumer side. So, I think that it's a good backdrop, but it's also a backdrop where scale is becoming more and more important.
Do you think that investors looking for opportunity might find these regional banks interesting because of their valuations?
Yeah, so that kind of the earlier point, so you had the large banks did quite well in 2025, and some of that was clearly, I think, the theme of active managers, institutions that we talked to rotating towards them because they saw that they were going to be beneficiaries of this new administration on the regulatory side and kind of just the cyclical recovery side as well. And so that was great, and those stocks did well. But then what you saw in the back half of the year was really strong passive flows, meaning ETFs came in and there's $30 billion of ETF buying in financials in 2025, which is primarily in large caps, where it was zero in aggregate in the 3 years before. So that really boosted the largest firms in the bank space. On the regional side, if you look at where they're trading, they did well, and they're trading a little bit above 13 times forward earnings, which is a little bit above kind of historical averages. But relative to the S&P 500, they normally trade around 70% of the S&P's multiple, and right now we're still only at 57%. So I think a lot of investors we talk to still see value in that part of the complex relative to some of the big banks that have already run really hard here into these themes that are really constructive, but we're all talking about them. We know about
Devin, I got to ask you two names here. Best opportunity, a name to stay away from.
Best opportunity. So we obviously had really good earnings from the large investment banks yesterday, and I still think that tailwind can continue. Capital markets
What's
at
the
a headline
name?
was good last year. I would say Goldman Sachs and Morgan Stanley, two best I think for yesterday. And then I think you have to go down the list. Small banks that I think are going to hit the price pressures that you mentioned, the scale issues. So that's where I'd kind of avoid. I think the middle-sized regionals are a good place as well.